Welcome everyone, this is Mike Hamilton from Trade Easy Way, and we are looking at this literally as the bell has just gone for the close of the Dow, and it just shows you how bearish this market is, as we've had some good jobs data today, non-farm payroll tomorrow, and we are very range bound. So we're range bound here through nearly 3/4 of the year, and now we're in this range here. And even this week we are in this range here, so we're getting smaller. So we're going to get a decision out of this tomorrow with non-farm payroll, and whichever way we come out of this box here is potentially the move for potentially the rest of the month and into the autumn. So let's just mark that off. Tell you what, let's box it. So I'm boxing pretty much last week's highs and this week's lows. And I will take this off. And whichever way we come out of that will potentially be the direction for the autumn. So how would I trade it tomorrow? I wouldn't. I would suggest you wait till 30 minutes into the open, mark off the open range, and then see if it breaks either way of the open range. Okay, it will be very choppy, potentially violent moves. So as far as the Dow is concerned, I'll be flat going into non-farm payroll. So I've done exactly the same with the US dollar yen. That has been very choppy. Here we are with this big down move on the 24th, and we can't break out of that range. So same applies to that. US dollar CAD, I mean, it's holding up, but very difficult to suggest a direction for that one. Strength of the dollar, this pound just can't get going certainly to the upside anyway. Let me just tidy this up and update. Let's just update the chart. So we basically had all that resistance up there, broken through that chart pattern there, and at the moment we've got support down here. Let's put it at 150. Let's put the line at 150 because it looks as if it wants to come and test that. So again, I mean, if you get a big move tomorrow on non-farm payroll, the beauty of these markets is we can just trade a pullback into next week. So there's no need to rush these markets. Let's just see what it gives us. And the fact we keep closing lower, it could just mean we just capitulate. It could mean that traders just literally give up on this and drop that down to 150. Pound yen is stuck at that fib level, so that's just not tradable. If you are going to trade it, try and short the high, but RSI is low, the MACD is low. That is a tough one. So if we break down here, then we can short the pullback. No change at the ECB. We had rate day today. We're closing underneath this level here, so it looks as if you can see I put an arrow down here at 108. Looks like that's the next stage. So we are in wave. It looks as if we're in process of seeing wave 3, which, if that pans out, would take us down to 108.30. Quick look at the DAX. Sorry, I was just flipping back to the indices. DAX Like I said before with the Dow, overall this is very bearish. All these moving averages across. So typically in a bearish consolidation, you come up, test the 20 EMA, and then leg down again. As far as Elliott wave is concerned, this is I'm going to class this as wave 1. This is wave 2, wave 3, and it's potentially the potentially an impulsive wave to the downside. Gold just drifting lower. And once we had these 3 days of pullbacks, so here we had leg 1, 2, and this is 3 in the process. Just a lot of support under here, but a strong number tomorrow I think could sink that gold. I think this is one of the most interesting forex charts out there at the moment. This is Euro CAD, massive support, massive resistance up here. Sorry, so a huge impulsive wave up. We left all these moving averages behind, so we're just coming back to the mean. But I think this could, we've got a trend line here. I think this could get easily down to 140. I say easily, I think it's got the capability of getting down to 140. Broken down under the 20 now. So this is probably one of the better charts out there. I think if we get a pullback to that level there, 148, that's quite a big ask. But there is a lot of support here. I think we could start to wind our way down here. And like I said, get to 140. So I'll be looking at that one. Okay, let's have a quick look at the stocks. I traded Apple yesterday from down here at this support into that 20 EMA and then ramped the stop up and got stopped out. Got quite a large slice of that move. Eventually I put my stop under 11280, having got in at 994. So I got most of yesterday's bar. So I day traded it basically, and I day traded it because I just don't trust these markets. I'm just fearful these markets could just roll over. So rather than get position and try and get get a swing trade going on that one, all these moving averages up here. This is a very common chart pattern. You'll see this on many different charts, particularly the charts that have been trending very well. They've had this slide. We've got some bargain hunters coming in and pushing that back up, but the bears are sitting there waiting to get short, but to see if this can wind its way down. Not so much on a good stock like Apple, but on a lot of other stocks that are vulnerable. Okay, so you can pretty much take your pick with all these stocks. Let me pick let's look at Goldman's today. See, very similar chart pattern. Yeah, it's been a very good bellwether stock. Yeah, nice waves to the upside. And of course, as soon as we started breaking down here in the summer, we then started to wave to the downside, and then some bargain hunters came in at the lows. It's pushed up, but it's struggling. So I would be interested in this if we can hold 185 into the weekend, and then see if we can push back up. Okay, hope that helps, and see you at the next update.